Welcome everyone. Welcome to StockPhonics. This is Prabhu Selvaraj here. Thank you everyone for signing up this masterclass. Today is the day one and we're going to learn about an important concept which is called as Nifty PE ratio. Now people out there talk about this PE ratio, but not many videos are available about this particular concept about Nifty PE ratio. In fact, we've been teaching this concept since last 5 years. And this is one of the important, you would say, a fundamental topic or important thing which you have to be kept in mind while you are dealing in stock market. This is the most important topic, at least for long-term investors who want to survive in the industry. So many such classes will be coming in near future. And today's topic is about Nifty PE ratio. The video is going to be about 25-30 minutes where I'm going to explain the complete concept of Nifty PE ratio, and I think you'll be loving this topic by end of the session. And one more thing is, there's been a concept which been used since last 20 years. There's a small tweak in the concept and we will also learn about that particular topic in today's session. I hope you're able to see my screen now. And I have a small presentation for this particular, and I would like to present those for you guys right now. Right, and let me put this across as slideshow. And Nifty PE ratio, we're going to talk about a little bit about StockPhonics and about myself, and definitely the PE ratio and the way of calculation method, the data dig for the last 23 years, and we will also discuss about the investment which you can do in terms of considering Nifty PE ratio. Now about StockPhonics, you guys have pretty much know that we've been in the industry since last 2018, and we've been conducting multiple batches and we have a huge followers in social media. And coming back to myself, you guys know about me, and at this point of time I would like to tell you guys, you can go to the website prabhuselvaraj.com if you want to know more about me. I have my complete profile over there. Please do visit to if you would like to know more about me. And let's quickly go back to the learning session now, right now. And we've been quite active in the Telegram, StockPhonics. The link is in the website itself, StockPhonics website, or you can search as StockPhonics in Telegram. We are quite active over there. Now let's come back to next slide. Now disclaimer, please pause this video for a minute and please have a look at the disclaimer. Now let's talk about Nifty PE ratio. Now, Nifty PE ratio is widely used in the industry, and it is a ratio used by the investors to find the stock's fair value. The value is identified by comparing the market price with its stock's earning. When you buy a stock, you earn a right to the company's future earnings and profits. But how do you know that buying a stock is a discounted or at the premium? Now this is where exactly this PE ratio will come into rescue you. It tells you whether the investment which you are doing on a particular stock is at fair value or undervalued or overvalued. PE ratio simply means a price an investor is willing to pay for the company's earnings, and there is no set range for a PE ratio. As a thumb rule, undervalued stocks will have a low PE, whereas the high PE ratio means the stock is overvalued. Investors like Warren Buffett advises investing in low PE stocks, as these stocks will have a high potential growth and are available cheaply in the market. Right? Now PE ratio equals to, the formula is share price divided by earning per share. For example, the PE ratio is 25, it means that investors are willing to pay 25 rupees per 1 rupee of profit company earns. Similarly, PE ratio 23 means investor willing to pay 23 rupees for 1 rupees profit collectively earned by all the companies which is included in Nifty, right? It's simply the PE ratio. This is the concept of the normal PE ratio in terms of stock is concerned, right? In terms of stock is concerned. Now here we are not discussing about this particular stock. No, we are going to consider this PE ratio for the Nifty 50 as an overall. Now don't confuse with the concept of PE ratio of a stock with the PE ratio of a Nifty 50. Nifty 50 PE ratio is very important to take a long-term decision for investments, and that is what we're going to discuss over here on the Nifty PE ratio. Now let's come back. Next slide. Now Nifty PE ratio is an average of PE ratio of all the 50 stocks in the index. It helps in deciding if the market is overvalued or undervalued. Now the average PE ratio of Nifty for the past 21 years is between 20.55. Whereas Nifty PE ratio goes about 28, there is a correction in the market. Now, this is the concept which has been followed since last 20 years. Of course, we're going to have a look at the data. And the PE ratio goes near 12 to 14 level, it has a quite strong support. PE ratio of Nifty below 15 is very attractive for the investments. And we have studied the PE ratio for the last 23 years to arriving at this conclusion. Now, if you talk about this PE ratio, as I said, 28 zone is very, very important. There is no written commitment or written rule that Nifty has to crash or a market will go for a correction about 28 zone. But this has been driven or taken out from the data studies in the last 23 years. Now, I've been telling this concept of PE ratio since 2018 and every time it has proven right. But now we will check with the actual data and we will see how exactly this works. Now let's come back to the next slide. Now here's a snapshot of the PE ratio for the last 23 years, which has been put into a tabular graph. The current PE ratio for the month of March 2023 stood at 20.13. Now this is a rough data which we're going to calculate. The data which is for the last 20 years, we'll have a look at it. I'll roughly tell you how do you read this table. Now in the year 2000, February 11th, Nifty PE ratio crossed 28 for the first time, right? For the first time. Now on the crossing 28, there has been a correction of 32% in the index. Nifty was trading at 1771 points, has dipped to 1203 points. Now the recovery almost took 14 or 6 days. The fall side on this particular day, it took almost 3 years, or not 3 years, more than 3 years to recover this percentage of loss percentage. And right after then, almost 10 years in 2008, Nifty PE ratio crossed 28.29, which means that it is again about the danger zone of 28 and we have seen a deep correction in the market. Now again, so if you could see, every time Nifty crossing almost 10 years, there has been a correction. Nifty is hitting 28 PE ratio right after 10 years. Let's look at the next round of data. Now on the year 2018, again Nifty PE ratio crossed 28.72, which means that again it is above the danger zone and we expected the correction. It did happen. In fact, 2018 we were in the market, we have alerted our students about this particular crash in index. Now again Nifty hit 2019 and 20, once again it has crossed 28 zone. And there, if you could see on 2020, we have clearly communicated that Nifty is above the danger zone of 28. We can anticipate the correction any point of time. And this was the correction which has been told about the corona, and it did happen, and we were able to save a lot of capital being eroded in terms of this crash. Now it almost took 300 days for recovery, and again on 21st of February, it has crossed a zone of 40. Now, why did it reach 40? What is the reason behind it? How it again come back to normal levels? We will discuss in the upcoming slide. So, if you could roughly see this, whenever a PE ratio is crossing 28, we have seen a deep correction in the market. Now, what does it mean? As a long-term investor, whenever you see a PE ratio crossing 28 zone, you have to safeguard your capital and you have to stay away from market, not getting into any kind of an investments. Now, which stocks will cross? Irrespective of any stock, market will go for a deep correction. Now there is a one month it has crossed 48 also. Now we will discuss what is the reason behind it, how did it was normalized. Now if you look at back my screen, Nifty P ratio on 30th of March crossed 40.03. On 31st of March, P ratio dropped by 18%. The value is back to 33.20. Did the correction happen in the market? No. Now what does simply means? When the P ratio is 28, market will go for a correction as per the data what you see in last 23 years. Now what does the correction means? There will be a dip in the market. Every stocks will go for a profit booking. A capital of or the value of every stock will get eroded between 25 to 50% on a big note depending upon the size of correction. Now when you are a long-term investor, when you get an alert stating that Nifty ratio is crossing 28, it is good to have a strict stop loss on all your positions and save your capital. And the minute it goes about 28, keep trailing your stop loss. Moment if stop loss hits, just come out. Market will expect a deep correction. Now in this particular month, earlier before 31st of March 2021, all the PE ratio has been calculated on the stand-alone earnings of the company. Now this PE ratio is a consolidated average PE ratio of all the PE earnings of all the company is taken into consideration. Now after 31st of March, it has been changed to complete earnings of the company. That's the result. PE ratio has dropped to 18% on that particular day, again came back to 33.20, then it got normalized. Now before this changes, whenever Nifty hit 28 and above, there has been a deep correction in the market. But now P ratio calculation has been revised. After this, it is hardly we finding Nifty is hitting 28 zones to hit a correction zone. Now let's see how does it varies from this point of time. Now we have seen this data correct exactly. Now if you could see on 21st of December 2022, Nifty hit a lifetime high and the P ratio was 22.61. Right? Now this is the important zone. So every time Nifty P ratio hit 28, we had a correction, but this time at 22 itself, Nifty has reached 18,800 zones. Then we see a deep down of 10%. The market correction did happen, and still the recovery has not happened. That is one way of this data to be looked at. Now second way this data is to be looked at is, now when you see the screen, when the P ratio is reaching 18 or 16, that is where the market is making a bottom out. Now the very important thing which you have to keep it in the mind this point of time is, whenever Nifty P ratio, right? Whenever Nifty P ratio is hitting 18 zone or 16 zone, that is where you're getting a wonderful opportunity for your long-term investment. Now the strategy, or you can say the way of investment for long-term as investments are made pretty simple. All you have to do is, whenever you see a Nifty P ratio hitting 16, 15, 14 or 17, that's the right time to start your investment. Once you have the investment started, you can keep track which stock to invest. If you are not much familiar which stock to invest, blindly click over any stock which is your favorite on Nifty 50. Every stock in index is expected to travel towards upside on this correction. So you can start your first cut of investment as low as when the P ratio is below 20 zones. Now this tabular whatever we are discussing now, it's the P ratio tabular what we have discussed. When the P ratio is about 28, when it goes for a correction, this is how you should safeguard your capital. When P ratio is about 28 zone, take a vacation from the market. When P ratio is 20 to 25 zones, do a research on fundamentally good stocks. And when the P ratio is between 15 to 20 zones, start your investment. So currently the P ratio is 20, so it's time. Now this video is, it's a like market specific, doesn't do with any date or any specific time bound. So whenever you see this P ratio is getting danger zone, you have to stay away from market. Whenever P ratio is quite attractive, you can start your investment. So as per this table, this is the right time to look into a long-term investment. But as the current scenario has been changed, Now it will be interesting to sit and watch at this point of time whether market will take correction or it can expect a further downfall. And it's between 15 to 20 zones you can start your investments. Before 15 to 15, increase your investments. Below ratio 10 zone, beg, borrow, steal and invest in stock market. Now, how do you have this data? How data has been backed? We'll discuss a little bit about the data. Now, all you have to do is go to the NSE website or NSE website, and here you can go to this market data and daily market reports. In this historical reports, in this indices, and you get this PE, PB, dividend yields data. In this, go and select the PE ratio and select equity and a Nifty 50 PE ratio. You can select any date, whatever you feel, whatever you need it. Between last 10-20 years, data is widely available, and just pull the data. It gives you data on daily basis. This data is available on daily basis. Now, as on 29th or 28th of March, Nifty P ratio was the lowest between 19.97, which is very attractive to start your investments in market. Now, this number, now because as 22 was the highest what we seen so far in the Nifty but made a high, we can expect this number to have a little bit of dip in another 2-3 more points before market could make a bottom out. Now this is the time to redefine the way you invest based on Nifty for long term. The number of 28 which we've been discussed since last 20 years could become invalid because of this calculation method change which happened last year. Now it will be very interesting to define a new way of investment based on PE ratio in the upcoming months. Now we have to wait and check what is the low Nifty makes this time after correction and how does it going to impact our earnings from stock market. Now there's a very vital information, not many people discuss about Nifty P ratio out there. Now to help you to get this data into more, I have uploaded a spreadsheet into this document. Right now this document is password protected, and the password for this document is capital P HOENI, as it is Phoenix, which is StockPhonics. P is the capital, and open this data. The same password you have to put twice and open the data. Now when you open the data is available for the last 20 years, right from 2000 to 2023 March, 29th of March data is there, where I have highlighted wherever Nifty has hit the danger zone. From there on, market gone for a correction. On 11th of February, market was trading at 17,771. From there on, market had a deep dive. Again, 18.4 is what we had a low, which is right time for investments. Again, next after 10 years from there, Nifty 2008 is what Nifty hit again danger zone, which is around here, where 28.89, then 28.89. Now again 2008 is the one which you seen a danger zone of 28.29, and from there on the market went for a deep correction again. 16.33 is what low we have seen. And however, that time we were not so active in the market, but on 2020 in the Corona is the one which we actively tracked these importance of this Nifty PE ratio. On 2020, after Corona dip, we have witnessed a lowest in our lifetime at 17.15 is what we have witnessed, the lowest in our lifetime. I mean, of course, in my tenure in stock market, and from there on, market did going a beautiful upside, and now the entire data is available here for the next 23 years. Download this data, study this data, whatever you find a difference, what you think the more information can be added into this program, and you can please leave in the comments. And now this ratio could be redefined currently based on the current market movement. This piece of information is nowhere available out there. You can do a fundamental study about this Nifty PE ratio, right? Nifty PE ratio, and there I think it was a pretty good class for the day, and I hope this first day of session was very much important, and you have learned a lot of things. You can leave your comments and ask your doubts and clarification in terms of Nifty P ratio. Like this, we'll be having many topics which is not out there in market regarding stock market. I hope you guys are more interested to see the next date topic and something new about stock market. And of course, we have been quite active. We've been quite active in the Telegram. You can follow me in Telegram, where I will be giving a lot of information about stock market, and live learning will be happening in the live market. I hope you guys make use of this. It's a kind of a platform which is being designed for the traders and investors like you, who would like to get a knowledge rightly at the right time and start implementing in the market. Now that's a quick video about today's topic. I hope you loved the video. We'll get back again in the next upcoming session. Till then, stay tuned with StockPhonics and have a lovely day ahead. Thank you.